Hello and welcome to day 2 of this 5-day event where we're going to be teaching you the foundations of how it is you can start trading profitably and safely by implementing the STAR trading method, which has taught countless people all around the world just like you how to become successful traders, even if they had zero knowledge to begin with. So today we're going to be looking at money mastery or risk mastery. How do we protect our capital? How do we start with a small amount of risk but make really exceptional returns and have a really high reward? So that's what we're going to be looking at today. My job as a mentor and an educator of people who want to learn how to trade is to make sure that this is as low risk as possible, that you are staying as safe as possible. And if you follow our systems, we have a couple of guarantees to make sure you're staying safe because we so believe in what we do and how we do it. So I'm going to share those with you in a little bit. But on today's agenda, we're going to be looking at how we protect our money. We're going to be looking at what the riskiest thing is that you can do in trading. We're going to be looking at the safest systems that you can implement to protect your capital and protect your money. And we're going to be looking at, first of all, what even is risk? And then we're going to be looking at what is your risk appetite. I want to know whether or not you're really comfortable with risk, whether you're really avoiding risk, whatever your natural risk tendency is, because if I know that, then I can better mentor and coach you, and so can my team, because you're going to end up behaving in the market in a certain way depending on your natural risk appetite. So a quick reminder of the STAR trading method. Number 1 is chart mastery. That's right at the start of your mastery journey. We looked at that in the previous session. Number 2 is risk and money mastery. That's what we're looking at right now in this session. Number 3 is strategy mastery. So once we've understood the market, what are the components we can bring together to create a strategy? Can we make sure that we're trading it successfully? What do we need to know in order to be able to do that? What do we need to know in order to enter the market at the right time and exit the market at the right time too? Then we're going to be looking at mindset mastery and emotional management, because that's really key and really important. And once you've mastered all these and you are a profitable trader, then how can we optimize your results? How can we get you even better results than we've gotten you before? So now if we look at what is covered in this risk mastery element, there's always some questions that come up around this. Now, one thing I do want to say straight off the bat is that you should make protecting your capital, you should be making risk and money management the number 1 priority when it comes to trading. Anybody who has traded for any period of time, and I know there's some people watching who have traded before, some people who've never traded before, both of you are going to learn stuff from this course. So you want to make risk your highest priority because we want to make sure we're protecting our capital. And like I was saying, anybody who's traded for any period of time will know that trading is just as much about protecting your money as it is about creating more wealth. You can't have one without the other. You need to make sure you're protecting your capital. Because if you're not, yes, you may make incredible returns very, very quickly, but those people who do that, those people who make phenomenal returns and shout about it all over the internet, guess what happens to their accounts if they're not managing risk? Yep, they lose it, it disappears because they don't have the foundations of correct risk management in place, which I'm going to be sharing with you today. So then we want to think about macro versus micro risk. What is our overall risk profile in the market versus what is our risk per trade profile? So I'll come on to that. What are the parameters we're looking at when it comes to risk? How do we identify where the market is telling us we can place trades, and where should we be establishing our risk? Where should we be having our stop losses? If you don't know what stop losses are, I'll come on to them shortly. And when it comes to trading safely, we only ever risk 1% of our account per trade. Sounds really low. And people often ask me, why are you trading so low? And I'll tell you why very, very shortly. I'll share with you the first ever lesson I had in risk and why I asked that very same question. But we are only risking 1%. And people think that trading is incredibly risky. We've busted that myth in the previous session, but people do. But if you're only risking 1% of your account, does that not feel a lot less risky? So if you have 10,000 in your account, you're only risking 100. Doesn't feel too risky, does it? It's very, very low percentage, very, very low risk, but we can still make phenomenal returns of 5% to 10% every single month, still risking such a low amount to make sure you are protected. I want to make sure that your money is protected. I think often with my mentees, I'm more concerned about protecting their money than they are, because they are learning the process of learning how to manage their risk, of learning how to trade the market successfully, and it's my job to keep them safe in that. And at the start of that journey, it's really important that you don't start with too much money in your account. Around $500, pounds, whatever currency you want to trade in, around 500, no more than £1,000 or US dollars maximum to begin with. And I personally believe that the riskiest thing any of us can do based on what's going on in the world right now, or really at any point, is to do absolutely nothing. The riskiest thing you can do is not be generating an additional income stream through trading and just relying on one source of income. It's never going to be the safe position. Too many people get made redundant. The economic climate that we're going into is only getting more and more difficult. The cost of living and just having a normal life is going up. One income is not enough. We have to generate an additional income. So why not do that with a form of income which takes you less than 30 minutes a day and can create phenomenal returns for you? Now, like I said, we do have a couple of guarantees in Star Trading, and this is the first one which we offer people, and that is if you follow our methodology, if you follow our system, then you will never ever blow an account, meaning you are never going to lose all of your money from an account. My priority, like I said, is to keep you safe, and so I've created a system which is going to make sure that you are completely safe and secure in the sense of you will never be able to blow an entire account. It is mathematically impossible for you to lose all of your money from your trading account if you follow the Star Trading method. And I know that is one thing that a lot of people are very scared of, very worried about, but again, if you follow the Star Trading method, that will not happen to you, and that is our guarantee. But you do have to follow the system, that's always the caveat. So what is risk? Risk is the amount of money that we stand to lose and is exposed in the market. So if we are placing a trade and we say we have 10,000 in our account and we're risking therefore 100, that is our risk. That 100 is in the market, which we're expecting it to make profit, but if it doesn't make profit, then it will be a cost of business trade, which is a losing trade, and we're only going to be losing 100. So our risk is 100. Good risk management will make you more money than chasing profits ever could. That's a quote from a very smart and very intelligent and very handsome individual that I know. So yeah, that is what is important about risk, because it will make you more money than just chasing profits will, and it's going to allow you to keep the profits that you make as well. So let me know, what is your natural risk tendency? Are you high risk? Do you enjoy that level of risk, or are you quite risk averse? When I was younger, I was very, very risk happy. I would take all the risks that you can think of. I would do it over and over and over again, not think too much of it. The older I seem to get, and maybe it's the more money I seem to have, the more risk averse I become. And I've noticed that in a lot of my investor friends as well. The wealthier that my investor friends are, the more opposed they are to risk, the more they're looking for certainty to protect their capital. And that is one thing that I have picked up as a habit. I'm way more risk averse than I used to be. So I don't even trade necessarily 1% of my account. Often I will trade smaller, but that's because my account balance is larger than the average retail trader. So let me know what your natural risk tendency is. I'd love to hear from you. Now, the riskiest thing, as I said before, is to do absolutely nothing. And why might that be? Well, let me ask you this question. Do you know what the current inflation rate is in your country right now? So at the time of recording this, in the UK it was 9.2%, in South Africa it was 7.2%, and in the USA it is 6.4%. Good time to be in the USA, although that's still quite high inflation. So let's look at the UK then, savings and inflation. We're lucky if we make 3% in a savings account, very lucky, although there is some accounts which will do that, and this is annually, 3% annually. So if inflation rate is 9%, then that 9% is eating away at the value of the money by 9% every year, but I'm gaining 3% each year, which means I'm still in a negative of 6%, which means I'm losing 6% of the value of my money. Okay, that doesn't get taken or debited out of my account, but my ability to use it to spend is eroded by 6%. So in effect, if your money is just sat in the bank and you're not doing anything with it to counteract inflation, like trading to counteract that inflation, then your money is literally rotting away. It is wasting away in the bank. And that is just simple mathematics. And that is the way that the world is changing. And it's always been the case if people only put their money in the bank, but at the current moment in time, it's particularly bad. Why would banks give you more interest than they're making? They're not going to do that, are they? Which is why banks make a lot of money, banks are investing your money, banks are trading your money. So why don't you do the same? Why don't you learn that skill set, which means you can make more money and not have to rely on the bank or rely on a boss to put money into your account every single month. You can do it for yourself. And if you're not doing it for yourself, then you are literally just letting your money rot away in the bank. Either because you're too lazy to do something about it, or because you just don't care. It's going to be one of those two things, or it could be just the fact that you don't know. But you are now doing this training, which means you're starting to know how you can create an additional income stream for yourself, beat inflation, beat the banks, and not have to rely on anybody else for an income stream ever again. And that's why I'm so passionate about sharing trading with people, because the whole ethos behind Star Trading is to make you an individual who is empowered to make the right financial choices and generate more cash, more capital that you can use to live the life that you want to live. That's why we will never trade for you, but we will teach you how to trade for yourself, because it's all about empowering you. So by not investing, you are letting your hard-earned money die and rot in the bank, rather than making your hard-earned money work hard for you. That's what we want to get you to. So how do we trade safely? How do we do it? What is the process we go on to make sure that as traders of the financial markets, that we are staying safe in the process? So number one, I've got 3 rules here, so I hope you're going to write them all down. Number one is we never, ever, ever trade without a stop loss. So a stop loss is an automatic order that we raise whenever we enter the market. And what it does is it says, right, if the market is going to go against me, go in the opposite direction to what I think it's going to do. Remember, we don't have 100% winning strategies. Nobody does. They don't exist. So if the market does go against me, then once it goes against me by this much, take me out. I don't want to be in the market anymore. So your stop loss is literally saying, stop my loss, stop my losing trade. So at the point it hits that, the market will exit you, the broker will exit you from that trade. And yes, you will have a loss, but you've capped your loss to a particular level. It's really, really important that you do that. Now, I've taught this all over the world. And when I was speaking at events, I remember one event in particular, I was speaking in Switzerland, literally all over the world I've spoken, helping people do this. And I always did this thing from the front of the room. And I remember in Switzerland, we had about 200 people in the room. And I asked people to raise their hand if they've ever traded before. People raised their hand. And then I said, keep your hand up if you've ever blown and lost an entire account. And a lot of people kept their hands up. And then I said, and let me know if that is, but keep your hand up if that is because you did not use a stop loss. And a lot of the hands stayed up. Some of them went down, but I saw them sniggering and laughing, and other halves were elbowing them because they knew that's what had happened. Because not using a stop loss keeps your account fully exposed. So a stop loss, you can say, right, I'm only risking X amount of my account, 1%. And if you don't have that in place, then you technically have at risk 100% of your account. No bueno, nicht gut, not what we want to have. I don't want you to be risking your entire account, which is why if you follow the Star Trading method, then you're going to be incredibly well protected and you're not going to have your account completely wiped out. So I was at this event in Switzerland, and this guy, after I do this, puts his hand up and he starts shouting out. I'm like, oh my goodness, I'm being heckled. What's going on here? He's going to try and take over and ruin this session. I'm trying to help people here. But what he actually says is, it's true. You have to use a stop loss. I didn't place a stop loss. I went out to buy myself a sandwich for lunch, and when I came back, I'd lost £5,000 of my account. Wow. That one tip that I've just given you has saved you at least £5,000. And I mean, I don't know what size account he was trading with. I don't know what level of skill set he had. Probably not a lot if he wasn't using a stop loss, but he didn't seem that upset about the fact he'd lost 5,000. So I think he had a good amount of cash in the bank, but that is not the point. It's never a good day if you lose £5,000 because you didn't follow rule number 1 of the Star Trading method, which is to use a stop loss. So make sure that you do that. Rule number 2, I've said this before and I'll say it over and over again because people love to ignore it in the chasing of more profits, but we never ever risk more than 1% of our account balance. Never do it. Don't do it. We're only risking 1%. Hopefully already from what I've said so far, you understand why that is, because it keeps you safe. Not only does it keep you safe, but on an emotional level, it's going to protect you because you're mentally and emotionally not too attached to just 1% of your account. So we want to make sure you're in as emotionally a level position as possible. I'll be talking about that in later sessions. And we want to make sure that by using just that 1%, you are protected on an emotional level, your account is protected, you're following the Star Trading method. Now, I told you I would share with you my first ever risk lesson. And when I was first going through this process of learning how to trade, I'd paid half my annual salary for the education that I received. A lot of money. I had to take out a credit card and a loan in order to pay for it. Crazy, but hey, it created the life I now have. When I was going through this first ever risk lesson and I heard them say that they only ever risk 1% of their account, I was shocked. I literally said, if you're such a good trader, why then are you only risking 1%? Couldn't you risk more and generate more profit? And they said, yes, you can. I was like, okay, so why don't you? And they said, because you could also lose more. So the higher the risk you have, the more you could win, yes, but also the more you could lose as well. Now I'm going to be talking about this, and there's something called random distribution, but basically random distribution means we don't know when our winners will appear, we don't know when our losers will appear. So if you have a bank of say 3 losers and you're risking 1%, you've lost 3% of your account. No biggie, it's fine, you can carry on as normal, it's not too much of an emotional impact. If you're risking 2%, that same period of loss is then 6% loss. Slightly bigger, still not too big, but it's double what you would have been losing if you were only risking 1%. Now, if you follow what some of the gurus online say, and you risk 5%, you risk 10%, then you're going to put yourself in a real bit of hot water, a little bit of bother here, and it's going to be a real emotional toll on you and not very comfortable. So that same set of 3 losers, which happens sometimes, is going to be at 5%, 15% that you've just lost of your entire account, or 30% if you follow what some of the gurus say and you're risking 10%. That is why people blow accounts and it disappears, because they're following terrible advice from online YouTubers, Instagram gurus, Facebook gurus who don't actually know how to look after people, don't actually know how to teach people, don't actually know how to have them protect their risk. So they get these crazy testimonials. I've had friends who've done those programs, got crazy amounts of money, and then lost it all the next day. It's feast or famine, and you don't want that. You want consistent profit, consistent income, and that only comes through having correct risk management. So rule number 3 now, the final of the 3 rules, is we never ever have a risk to reward ratio of less than a 1-for-1. So what that means is if we're risking 1%, we should stand to make back 1% at least of profit. Ideally more, but the minimum is 1-for-1. So if I've got a 10,000 account, I'm risking 100 on a trade, then the potential profit I stand to make back should also be 100 or 150 or 200, but it should never be less than that 100 as a potential profit. So it's really, really important that you have that correct. There was actually a massive study done by one of the largest brokers in the world, and they studied retail traders. So retail traders, people like you, people like me, who are trading their own capital, they don't trade on behalf of an institution or anything like that. And this research study actually showed that the majority of retail traders had more winning trades than they had losing trades, but also that the majority of traders were losing money, which is why you get those statistics of 70, 80, 90% of retail traders losing money. And the reason they lose is because they're uneducated and they're not following these rules. How do I know they're not following these rules? Because of this study. So explain to me, how can the majority have more winning trades, but the majority be losing money? That doesn't make sense. It only makes sense if you understand risk management, risk to reward, and risk percentages. So what was happening is they weren't using correct risk to reward. They weren't using stop losses. So when they would have a loser, that losing trade would be really, really big as a cash value. And when they had a winner, it would be really small. They'd cut it off early because they wanted to bank that profit, and therefore their winners were too small and their losers were too big. Not a good way to be operating. So that's why I know that the majority of traders out there who are losing money, they're losing money because they're not educated, they've not had support, they're not following the right systems, they're not following the right processes. So that's why we have to have these risk parameters in place, these risk rules in place that we apply to every single trade that we use, that we put into the market. Now, if you don't follow these rules, I do have a way of dealing with my mentees if they don't stick to these rules. You may find this familiar. So that's what I'm going to do. I'm going to come and find you and I'm going to tell you off and make sure that you do follow the risk rules going forward. At Star Trading, for our mentees, we do have a 10-step risk process that we apply to every trade before we enter the market. So I want to introduce you to the EST method, which stands for entry, stop, and target. So let's say that the price of the market that we're going to enter in at is 150. Let's say our stop is 100, and let's say that our target is 250. Now, if you're wondering how we pick where our entry, stop, and target is, then the chart is going to tell you, the market is going to tell you where it is that you should enter, and that's going to be based upon one of the Star Trading strategies that you're implementing into the market. So once you understand our strategies, then you're going to understand exactly where to enter and where to exit the market. That's why we have a really clear system in place, and we hold our mentees' hand through the whole process to make sure they're applying it correctly. So between your entry and your stop is 50 points. Between your target and your entry is 100 points. So what do we already notice here in terms of our risk rules? Number one, we've got a stop loss in place. place. Brilliant. Now we're only going to risk 1% of our accounts. That's number 2 ticked off. And do we have decent risk to reward here? Is our risk to our reward at least 1-for-1, or is our reward bigger than our risk? The answer is yes. So your entry to stop points, that is your risk points. Your target to entry points, that is your reward points. So we take this information and we input it into the Star Trading risk calculator. So we take those prices for our entry, stop, and our target. We put it into the risk calculator, which will then tell us how much of our account we need to risk for this trade. It's also going to tell us if our risk reward is incorrect and give us a little warning. And then we can enter the market safely, knowing that we're using correct risk to reward and we're risking the right amount of money from our account as well. So the calculator will then tell us how much cash we need to place on the trade, and more importantly, if we're operating within correct risk parameters. Now, when you're trading like this, you can, and we're basing it on percentages, so we don't base it upon pip gain. That doesn't work for us. We're talking about percentages. And in Star Trading, as the community, when we're talking to each other, when we're engaging in our private community group for all of our students and mentees, we never ever talk about cash. We talk about percentage returns, because you could be operating with a 10,000 account, you could be operating with a 1 million account, but you're taking the same trades, which is why people are talking about in that community the different trades that they are taking. And then people get inspired, people learn from each other, and people ask questions and they get them answered. And we can see what other people are trading. So we always talk percentages because it's the same performance. And if you're making a consistent, let's say 5% per month using our strategies, then over 1 year, over 2 years, over 3 years, you could stick at that same 5%, but you're actually making more money, all from that 30 minutes per day, because the performance is the same, but your cash value goes up because the size of your account will go up. We're going to be talking about how that happens later on in this journey. Trading is the best method I know for compounding interest and growing money that I've ever seen. And that can be anywhere in the world that you want to be, because trading is non-location specific. You can be anywhere. That's why I got into it. And using compound interest is an absolute game changer. It's a thing that made me realize that we have to learn to trade, that I had to learn to trade, and I was passionate about sharing it with other people. That is what has allowed me to start with a small account. I started with about £500, and I've now grown my account to, well, a heck of a lot more than that, shall we say. And it's what's allowed me to then diversify into other investment vehicles like business, like property. I've got a whole property portfolio in the UK as well. Although we're looking to purchase internationally now, so we'll see how that goes. And that's one of the reasons why I love trading, because of the way it utilizes compound interest. And we're going to be talking about that when we talk about optimization within the Star Trading methodology. So here are some of your next steps. So I want you to put time aside in your diary tomorrow to watch the session that we've got, the next session. And remember, trading is only risky if you don't know what you're doing. So make sure you get the education in place, and that's partly what you're doing so far by being on this course. Now, I want you to make sure that you are posting any questions that you've got through this mini course into the Facebook group. I want you to let me know in that Facebook group if you consider yourself to be high risk or low risk, and why. And also, why not just share with me what's got you interested in trading? And I'd love to know if I've changed your mind on how risky trading is based upon this session. So did you think it was a lot riskier than it was, but now you understand we can put stop losses in place? Now you understand we only risk 1% of our account. Now you know that if we use correct risk to reward, that you actually only need to win 50% of the time to even just break even. Yeah, no, I didn't mention that before. How good is that? So if you've got correct risk to reward, 1-for-1 as a minimum, so our minimum risk to reward means we only need to win half the time in order to break even. So that's an absolute massive strength if you're using correct risk reward and correct risk management. So make sure you stay safe in the market. Remember, if you follow the Star Trading method, then you're never going to blow an entire account. You're never going to lose all of your money. It is mathematically impossible. And make sure you say hi to me. Let me know how you have found this session, and put a little post in the Facebook group as well about your risk tendency and whether or not you have changed your opinion on how risky trading is based upon this session. My name is Lewis Crompton. Thank you very much for joining me on this session. I will see you in the next one.